A lot of people say, oh my gosh, the closing cost, it's not a cost to you, it's a savings. Hi, I'm here to explain what the word escrow means. Because, there's a lot of terms when you're purchasing your home, different words that go around and you're like, what does that really mean? So you're going to see escrows in two parts. You're going to see an escrow deposit, which is when you're entering into contract. It's what you're going to be putting as a deposit for the purchase of your home, which is going to be held normally by a title agent or the closing agent. These monies are to let the seller know that you're serious about purchasing the property, and they're going to be held by this title company until it's time for you to close, and then that money should be credited towards the total of the money that you're going to be bringing to closing. Now, the second word, escrows, that has to do with your property taxes and insurance and flood insurance if you're in a flood zone. So that means that if your payment has principal and interest, mortgage insurance, taxes, insurance, which is the homeowners, and flood, those parts are escrows, which is everything apart from the principal and interest. It's collected with your monthly payment, but it's going to be used to pay your monthly mortgage insurance and your yearly homeowners insurance, property taxes, and flood insurance. So when you close, there's called an escrow holdback or an escrow savings. Okay, so what the bank is going to do, for example, if you're going to close on a home in September, okay, your first payment, let's say, it's not going to be until October 1st, but property taxes are due as of November 1st, and the banks pay the property taxes during the month of November because that's how you get a 4% discount on your property taxes. So the bank is always going to pay them in November. So if you're closing in September and your first payment is in October, already in November, your property taxes are going to be due and the bank is going to pay them. Okay, so at closing, at this point of the year, banks will now already collect as a closing part of your closing cost, which is the escrows, about 12 months of taxes, because they have to have the full property taxes by November. And this is based on the bill for last year, which is 2025. Because right now we don't know what the property taxes are going to be in 2026 until the property taxes bills are sent, which is as of November 1st. So in your closing, you're going to have the escrow reserves, okay, which is going to be whatever amount of taxes you're going to need. So by the time November comes around, you will have a full year of taxes in your escrow account. It's going to include some reserves of your property insurance, because at closing, you have to pay the whole year of property insurance, your first year. So as of you start making your monthly payments, which is now, let's say October, you will have that monthly portion of your homeowner's insurance to every month as you make your complete mortgage payments, you will be saving. So next year around this time, the bank's going to have enough to renew your homeowner's insurance, to renew your flood. So at closing, you will be responsible for paying the first year of homeowner's insurance and the first year of flood insurance. So then as you make your mortgage payments by next year, you will have enough in your escrow account to renew the homeowner's insurance and the flood insurance. Now, I just want you to know that every year when you get your renewal papers for these insurances, which you should get at least a month before it's renewal time, if you see that the insurances are varying a lot, you can always quote with your same agent, give them a call and say, hey, my insurance went up a bunch and I want you to requote me. Or you can find and quote with other agents. You have the right every year, if you need to change your insurance agent or insurance carrier if you're going to get better pricing. Always find out if you're going to get better pricing. So you're allowed to do that. You just have to, with time, send this new insurance certificate or have your new agent or your current agent inform the bank to say, hey, don't pay this insurance renewal, but pay this other one that I'm getting. So you're allowed to do that every year. You can choose your homeowners insurance company and your flood insurance company. You just can't stay without it, because then the bank is going to figure out how to put their own insurance. Okay. And that's the escrow reserve that comes out. And a lot of people say, oh my gosh, the closing cost, that is actually a savings that's being put aside to pay for your property taxes, to renew your homeowner's insurance, and to renew your flood insurance. So it's a savings that's putting aside, which people say it's a closing cost. Well, it's not a cost to you, it's a savings that we have to set aside for insurances and property taxes. Now, at closing, the seller has to give you a credit of whatever months he used in the year of the property as far as the property taxes. Now, it's not going to be a dollar per dollar credit, because it has to do with different things like the ad valorem and non-ad valorem. There's some things that the seller pays within the property taxes that he's actually paying in advance. So you will still get a credit for the months that he's used the property, but it might not be dollar for dollar, like I said. So that would be your escrow reserves. Now, around every January, the bank does an escrow analysis, and they take whatever they paid the previous year for your property taxes and for your insurance into consideration. And then they see, okay, how much money do we still have in escrow? Banks are only allowed to keep what is needed when the time comes to renew the insurance or to pay the property taxes, plus 2 months of reserves. And that's just if the homeowner's insurance goes up or the taxes go up, they want to have a little extra. But if they have any more than that money, they will, when they do the escrow analysis, if your property taxes went down and your insurances went down, they should refund you whatever excess they have in that escrow reserve account. Now, if they see in January that your taxes went up and your insurance go up, now you may also have a shortage in your escrow account. This is why when they do this escrow analysis, don't just tear it up when you get it in the mail. Look at it, because they're showing you every single amount of money that they put in escrow from your monthly payments, what they use that money to pay, what's left over, and you can confirm, okay, my property taxes were this, so they pay this. My insurance was this, and they pay this. I mean, it is the bank, they use it to pay these items, but it's your house and it's your responsibility to make sure that the amounts are correct that are being paid, and that the escrow analysis has the right information. So you should review when you get your escrow analysis and make sure that everything that the bank paid is what it was. Okay, there's always people make mistakes, but it's to your interest to be on top of this escrow analysis situation. So that is the escrow reserve. So those are, when you talk about escrows, those are the two escrows that we're talking about: the deposit when you purchase a property, and the escrow reserves, which is when you're already in the contract and it's money that's set aside that to pay your insurances. Now, there are certain programs with a certain amount of down payment that you can waive to have these escrows included in your monthly payment, where you would actually pay the bank the principal, the interest every month, and the escrows, you would be responsible for renewing your homeowner's insurance and paying your property taxes. It all depends on how well you budget yourself, if that's a route that you want to take, which, yes, it would make your closing cost or reserves a lot lower. In that moment, you would just pay for the first year homeowners and first year flood, but everything else you would be in charge of renewing these insurances and paying your property taxes. Therefore, yes, your closing costs would be lower. But you have to see, like I said, if you're a person that's good at budgeting and saving these monies, so in November you would be able to pay your property taxes with a 4% discount. I mean, you have until March to pay your property taxes before they're late. It's just as the months go past November, it's less discount. It's 4%. Then it's less, and then after the end of the year, you get no discount. You're paying the full amount of property taxes. So if you have any questions regarding this, I'm here to help you. You are meant for more.